Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This simply talks with another video. So this time, this video is the festive season special, and this time around, these stocks are not related to the festive season per se, but these are the five stocks in the very small cap, larger small cap, and mid cap domain that I believe could do extremely well in the next 5 to 7, 8 years. So there have been a lot of queries with YouTube, you can say on YouTube, as well as through Patreon members that I'm not giving at the moment, and I'm not exploring stocks or companies that are looking extremely good from a longer term time frame. So uh, I decided over the last 2 3 days to just analyze some of the companies, and let's look at how the numbers have shaped up for these companies, and eventually come up with five companies which look good in terms of their business, in terms of their prospects, and the numbers that they are producing from the next 4 to 5 years perspective. And all these companies are consumer oriented, so they this have direct relation with consumers. These are not into infrastructure, real estate, IT, etc. Direct consumer based companies, I believe, could do extremely well over the next 5, 7, 8, 10 years. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. I'm not a member of the NSC and BSC, and that I'm not a portfolio advisor. Whatever discussions I have with respect to stocks and companies is purely on the basis of my understanding of the market over the last 12, 13 years, and the way I have invested, traded into the market over this period. So, whatever decisions with respect to investment or trading that you take, kindly do consult your official financial advisor before doing any sort of that thing. So before I talk about these five companies, here's a small request. Kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions, seek out answers in greater detail. Once you get that $10 monthly membership, you'll get access to my portfolio, which is also a watch list because it has around 30 to 35 stocks, access analysis on different companies, analysis on markets across the globe, on economies, discussion on domestic and global economy, as well as whatever queries that you'll be having. I'll be answering that. So you can become a member on Patreon on a monthly basis or on WhatsApp on a yearly basis. So that's an yearly membership on WhatsApp that is available. You can email me for that. Now, in order to understand about these companies, let me take you to the screener website. So the companies that I'm going to talk about, and the five companies that I really like over this period. And interestingly, this company has come about after several months. So this is 3B Blackbio DX, that is a kill pest that has come out with decent June quarter numbers. So I'll discuss about this. Bikaji Foods, we all know about it and how the stock is doing. If somebody is into the market, they would understand as to how the stock has been performing. So we'll discuss about it in details. Hindustan Foods is the third one. Very interesting company in the consumer food business, but not quite directly related to it. It provides raw material for the consumer food business. Ethos, the luxury, you can say, watch brand, extremely interesting, as well as FSN e-commerce, that is Nykaa. So Nykaa has come back into the picture because of large deals and large trades that have taken place uh, over the last few weeks. So we'll discuss about these companies in detail. Again, a disclaimer, I might and might not be having these companies into my trading portfolio. I keep changing my trading portfolio from time to time. So kindly take that on note. So let's go one by one. Let's discuss about 3B Black Bio, Kill Pest, and I have a number of videos on Kill Pest. I might put a link as well to it, which I had put up say 5 years back, 6 years back, even during the pandemic. So we discussed about Kill Pest when it was a merely 100 200 crore market cap company. Now it's a 1100 crore market cap company, has gone up a lot. It used to trade at around 90 100 rupees when I first found this out. Today it is around 1300 rupees. Uh, So incorporated in 2011, basically 3B Black Bio was erstwhile Kilpest India, and this was more or less a company that was into pesticides and agrochemicals rather than into diagnostics. But in 2011-12, I mean, it's established in 2011, but by 2015-16, it transformed into a building PCR kits and enzymes, you can say, and PCR diagnostic regimens, reagents, etc., reagents, which helped in diagnostic tests of different sorts like SARS and even the pandemic like COVID. They developed kits for that, and so that's what shot up the stock. If you look at on a 5 year basis, that's what helped the stock go from virtually nothing around 70-80 rupees all the way up to around 500, and then there was a correction 700, and then there was a correction after 2021. So that was the high, and later on the stock corrected, and so on and so forth. So at the moment, why the second surge has taken place and what is going on, so let's just have a look at that. So basically, if you look at the quarterly, yearly numbers first, if you look at the yearly numbers from FY13 onwards, and these are consolidated numbers, they had produced 20 crores, then went up to 22 crores, 19 crores. Nothing was happening around here till FY18, even 19. But if you look at FY18, they did profit of 3 crores and an EPS of 5.3. In FY19, they did the same figure in terms of sales, 23 crores, but the margins expanded from 23% to 31%. So you look at here how the margins have expanded from 6% all the way to 31% and have kept on expanding. So in 2019, they did an EPS of 8 rupees. In 2020, they did an EPS of 10 rupees. And this was the time when I was into the stock as well as was making videos on it. So before the pandemic, 2019, there was no pandemic. FY20 had all the inscription of pre-pandemic time because March 31st till then they had not sold a single kit. 10.2 rupees was the EPS then. Now, why I'm liking this company is that so March 2020, remember they did 29 crores of sales, in which they did profit of 8 crores and an EPS of 10.2 rupees. In June of 2024, this is also virtually a non-pandemic month, they did sales of 19 crores. So from around in March of 19, they did sales of yearly sales of 23 crores to today doing sales of 19 crores in one quarter, margins expanding to 56%, and eventually profit of around 11 crores after tax profit and an EPS of 13 rupees versus an EPS of 10 rupees for the year in March 2020. So that has been the jump, and that is the major reason why the stock has absolutely zoomed from 700 720 rupees all the way to 1300 1320. So I believe this trend could continue. They have their European subsidiary in England, and that has started to bring them dividend, bring them revenue in a decent manner. So I won't be surprised if they do 100 crores of sales this year versus 79 78 crores of sales, 74 75 crores of sales in FY24. So they might do 100 crores of sales and eventually end up doing around 50 crores of net profit. That's what I feel. I think 50 crores of net profit is a possibility in 3B Black Buy, or at least 46 47 crores of net profit is what they are going to may do in FY25. Remember, it's a very small company, 1100 crores, very less free float. The free float is around maximum 2 3,000 shares on an average day. 2 to 3,000 shares is traded are traded in a day, so be very careful, but looks good from a 5 to 10 year perspective. One can put in very small amounts of SIP into the stock. If you look at the shareholding pattern as well, 42 crore 42%, 41 42% is with the promoter, 3.3% with the FIIs. So FIIs have increased their stake. DIIs have also increased their stake, which is interesting. overall. So 3B Blackbio looks a very good micro cap company at the moment, but again keep relevant stop losses and trade and invest into the stock your own analysis. Second stock in this list is Bikaji Foods, a contrast from the previous stock. So 24,000 crore market cap company, it has gone up. The PE has stretched to around 80, 82. It is probably not a buy at these levels. Probably major declines is where you need to look at whenever the market crashes. The stock goes down on a bad, you can say, day, on a bad quarter. You might try to accumulate, because I feel in the next 20 to 30 quarters it could do extremely well. Why I say that is, if you look at the numbers and the margins, they are getting better. So if you look at the June quarter number, and if I just make this consolidated, then we're looking at 572 crores of sales in the June quarter versus 482. You had profits of 66 crores, which has gone up to 92 crores, which is extremely good. So margins from 14% has gone up to 16%. Margins slightly increased, but sales has grown much better, 18, 17, 18%. 18, 20% sales growth in a consumer food business is a very strong trend. That means it is gaining market share. That means it is one of the market leaders in one of its segments. Now, basically, what Bikaji Foods does is, we probably 90-95% of us know, but it is India's largest fast moving consumer goods brands. The company's product range includes six principal, you can say, products categories: bhujia, namkeen, packaged sweets, papad, western snacks, as well as other snacks, which primarily includes gift packs, etc. And their western snack business has been doing well over the last 2 years, along with their you can say sweets business, in which they are you can say selling big time their products. So it is Sohan Papri, one of its products that is being sold big time, and it has lesser margin, but the volume is so huge now that they gain a lot of traction through that. So 24,000 crore, yes, stretched 10 times market cap to sales. A company, a stock that needs to be bought in market distress. Otherwise, you can do small SIPs again over the next 5, 7, 8 years. Could go drastic, it could grow drastically from these levels. So, again, as I mentioned, profit grew by around 50%, and sales grew by 18-19%. Margin expanded, and eventually net profit of 58 crores versus 41 crores is a very good jump, 40% profit growth on the bottom line. So the results of Bikaji is on 24. So uh, buy as an SIP, that would be a better way of looking at, rather than doing anything else. That's my assessment overall. If you look at the shareholding pattern as well, you have only 4% shareholding with the public shareholder. Otherwise, you have around 7.5% with FIIs and 13.3% is with DII. So the stock per se has performed extremely well, and the way large investors are holding on to the stock, I don't see major downside on the stock in a shorter term. The technically also the stock is looking good, but do SIP, and that would be a better option. Third in the list is in the Hindustan Foods, a very interesting company, 7,500 crore. Again, a company that I have covered at least 2-3 times earlier. Basically, it is an India-based you can say company which is engaged in contract manufacturing of various FMCG products like chips, etc. Home care products, personal care products, you have beverages, etc. They make. They also do manufacturing of leather shoes and accessories. That is also one of the segments that they have got into. So basically, they make the food products, the namkeens, etc., sweets, and so on and so forth, for the branded companies. Those branded companies who you can say outsource their manufacturing. The Hindustan Foods does the manufacturing for them. Large conglomerate do that. So that's how it is. Again, a stock that has run up in this bull run over the last 1 month or so. What you need to do is wait for major corrections and declines to buy into. Why I like this company is basically because of its consistent uh, sales growth and margin that has remained consistently strong even in difficult times for the FMCG business. The company has done well. So in March 22, 23, 24, the FMCG sector did not do that well. Still, the margins remained in the vicinity of 6 to 8%. The operating profit grew from 113 crores to 222 crores. So the company was doing extremely well, although the stock wasn't doing that well. Again, profit grew from 45 crores to 93 crores and is growing at the moment. Very interesting, very good company to look at. If you look at the shareholding pattern, yes, FIIs have sold onto the stock, but overall, the way the business is growing over the next 20-25 quarters, again, as I mentioned, the company should end up doing reasonably well. Again, an SIP kind of company to be looked at. Fourth in this list, so let me get you the fourth one. Ethos, again a company that has come up with its IPO very recently. So if you are looking at a 3-year chart, uh, then you won't be able to have a look at it because the IPO came around June of 2022. Around 750, 700 rupees it was trading. Now the stock has gone to all the way to 3400. That's how the wealth has been created by the stock, which was around 2000 crore market cap. A very interesting company again. If you look at the results, so what does Ethos do? Let me give you a snapshot. So basically, Ethos is the promoter is KDDL, and Ethos is India's largest luxury and premium watch retail player. So they provide those luxury brand watch brands, and uh, it is the only company in the luxury brand business which sells luxury brand clock business or watches business that is listed at the moment. So again, why the company is looking very decent is because of its numbers. Look at the June quarter numbers: 270 crores of sales versus 230 crores in a quarter in which they have said that because of the summer heat, they were not able to sell that well. So from 34 crores, the operating profit went to 43 crores, which is a decent jump. For the quarter, margins remain steady at 16%. Overall, if you look at the profits have gone up. So from 444 crores pre-pandemic, now sales are set to be around 1100 crores. I won't be surprised the sales would be 1100 crores, so 2.5 times over the last 5 years. The profits have gone from 36 crores to it is expected to be around 160 170 crores, which will be very interesting. So again, it has gone up 5 times operating profit, and EPS as well has increased around 4 to 5 times. If you look at shareholding pattern, again 11% is with the FIIs, 14% with DIIs, and you can say retail holding has not been that strong. Promoter have sold. Yes, promoters have sold KDDL. The erstwhile promoters have sold major chunk from 65%. Promoter shareholding has come to 55%. Public shareholding is around 20%. If you look deep into it, then Mukul Mahavir and other large, you can say, public shareholders are also there. And if I add that up, that comes out to be somewhere around 6.5%. So only around 13.5% is the free float of the stock, and the number of shares are very less. So around 40 to 50,000 shares on an average day trade. So kindly be careful about it. But very interesting with the kind of growth in the Indian rich people that is taking place. I think Ethos could be that luxury brand that you can play that theme with over the next decade or so. So that's why I picked this up. And last on the list is, but not the least, is FSN e-commerce, which is Nykaa. All the fashion, you can say, accessory brands online. That's what Nykaa sells, and we all know about it. 56,000 crore market cap. 8 times market cap to sales is not very expensive, and that's why I picked it. if you look at the numbers were extremely good pre-IPO, and which happens with many of the companies. 574 crores went to 1100 crores, went to 1770 crores, went to 2440 crores, and it kept growing 3770, 5100. But then there has been some stall. So from 5770 to 5140, the growth was around 35-40%. Then there was a growth of only 20%. If you look at the sales growth that I'm talking about, if you look at June quarter numbers, 1750 crores of sales, um, versus 1422 is a very decent number. So 20-24% growth, not the 40% that they used to do earlier, but still decent. And what has you can say what has intrigued me is this, that they have done really well in terms of operating profit. From 73 crores it has gone to 96 crores. 5% margin has increased to 6%. It's a very competitive business, the online, you can say, fashion accessory kind of business. They have a lot of competition at the moment, the way online brands have propped up. So margin expansion is pretty good. Profitability has increased from around 5 crores in June. The profit has gone to 14 crores. So 3x jump in net profit. So this is good. The only reason why the stock hasn't performed that well over the last 2 years or so, if you look at the stock price here, the stock has catapulted, absolutely catapulted from November of 2021 when it was around 400 rupees. It's around languishing around 197, has gone down sharply. The reason for that kind of a fall has been uh, the valuation. At that point of time, the valuation was completely out of whack. If I look at market cap to sales, at that point of time we were trading at around 47 times, 45, 47 times, and today we now are trading at around 8 times. So reasonable valuations now with the growth in profitability coming in can be looked at. If you look at the shareholding pattern as well, FIIs have increased holding, that has remained steady at around 10 and a half. DII is 18.3, and public shareholding is now reduced to around 19%. Things are looking good in Nykaa for that matter. So I believe that this stock could do well over the next 6, 8, 10 years. If you look at the kind of consumer sentiment has been with respect to how people are spending money, on which things people are spending money, this could also do well. And if you're buying into these 4 5 companies, then this will give you stability as well, because it's a 60,000 crore larger kind of a company. Out of the five, it is the largest. So these are the 5 companies I believe that are looking reasonably in terms of valuation. That are looking reasonable, not cheap, but reasonable. And if you do SIP, if you do consistent investment in them, then you'll get decent prices as well if there is a fall in the market. So uh, good. I believe that there's something to analyze from a, you can say, 6 to 10 years perspective, 5 to 10 years perspective, if you like to do investment. So this was my video on the festive picks for this time around. Please like and subscribe my channel and hit the bell icon so you get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.